Hey guys, welcome back to my series of investing $10 a day. This video is just going to be a bit about what my strategy is, what platform I use to invest, what platforms I use to track my investments, and also what I recommend you guys use. No financial advice, of course. I did finally set up my new webcam, so bear with me. There will be a few edits this video, but I'm just making sure you guys get the best content I can make. So let's get stuck into it. The first thing I'm going to go over is my strategy. So this on the screen for you guys. So the average person when they start investing is they would invest in something like the S&P 500, which is on average about a 10% return year on year. And that holds the largest 500 publicly traded companies in the US. Or they would do something like normally the indices guys is what they invest in. They're too scared to invest in individual stocks. Or they'd invest something in like the Nasdaq 100, which gives you 11 to 12% return year on year, and that holds the largest non-financial companies on the Nasdaq stock exchange. In Australia, for your superannuation, you get about 8 to 12% per year. But all this year depends on, or not the super, but when you're investing in indices, it all does depend on when you start investing, how much you initially put in at the start, and how often you put in. Because if you put all your money in at the top of a bull market, guys, you won't see your portfolio be in profit for at least a few years. So that average 10% return will take a while for you to build up. And then you got to consider on top of this, if you've got an average inflation rate of 5% year on year, that 11-12% you're making, or 10% really, is only 5. And really, the average inflation rate I think is more towards 10%. The government can actually adjust what figures they use to make up that percent. So obviously they're going to make it not look too bad. Yeah. So now let's go over my strategy. So I invest for this portfolio into leading technology, AI, and crypto assets that are and will continue to disrupt our economy. This also may include companies that are used to power this tech and AI, such as renewables and companies such as Nvidia that make the semiconductors. Price won't be brought down by companies that perform badly if you were to just invest in the S&P 500 or similar, because I'm buying the individual assets themselves. So I don't have to worry about another company that's doing bad bringing down my overall returns. So I buy these assets that when they're at good prices, not just when they're going up, which is when people tend to buy. Fear of missing out, they'll see something pump and then they'll end up buying it. And it's not how you're supposed to do it, guys. Because I'm investing $10 per day, I'm dollar cost averaging into these assets, means I've got a better chance of getting better entries on these assets and a better average buy price. I also use charting to help me get a better understanding when I should be buying these things. And we're actually in a bull market at the moment. And my guess is that we've probably only got about a year left to accumulate these assets, and then the market will turn again. There's no guarantee, but normally that's how the market works, guys. It's normally about 4-year cycles. So it doesn't just go up forever, or everyone would be rich and everyone would be investing. It'd be too easy. So I still think that even though we're halfway through this bull market already, I still think I can make 30, 40, maybe even 50% over the next year. But the bear market is when you actually start to make the most money, because you can be accumulating the whole bear market instead of just at the end of the bull market, like we pretty much are now. I wouldn't say the end. I still think we've got a year left, but yeah. So I invest $10 per day, Monday to Friday, when the market's either open just before the market opens or once the market's closed. At the moment, it's been after the market's closed because I like to see how we go on the day, and then I'll prepare for the following day. And then lastly, this account isn't about how much money I'm actually investing. It's about the percent return I can make, because you can be investing any amount of money. So say if I can make a 40% return in 1 year and I invested $1,000, I would have made $400 off that $1,000. But say you invested $100,000 and I made a 40% return, then you would have made $40,000. It's all relative to how much you actually invest. The main thing is though my percentage that I can make from from the money invested. That's the main strategy for this account. So yeah, guys, next we'll move into the platforms that I use. Okay, for the purpose of these videos, for buying my assets, I use an exchange called eToro. I wouldn't say I'd recommend it for you guys to use. I'll tell you guys at the end what I would recommend you guys using. I use it personally because it looks good to display for you guys. You've got the companies there. It just looks nice in columns. I can adjust the filters to what I require. Such as these are probably the three ones I use the most, which is how much I've invested, the percentage profit and loss, and the daily change. But you can change that in the filter settings here to whatever you need, but they're the three I like using. So yeah, it's just really easy to display for you guys to understand. But yeah, I wouldn't recommend just due to the fees, especially when you're only investing $10 per day. It's all relative to how much you do invest. But yeah, I'll tell you guys after. What I use to track the portfolio is called stock events. I don't use eToro because it shows on eToro, it shows you the overall percentage, including what you've invested. So that's not what you want, because so that's saying I've invested what, about $310 so far. But you want this value here, which is your overall percentage profit and loss and your overall dollar amount that you've gained. But purely percentage is what this portfolio is all about, proving to you guys that I can make 30, 40, 50% per year return. So stock events is also good for looking at. It's also got dividends. I do have a dividend accounts, and I use stock events to track those. Obviously, this account isn't about dividends, it's purely growth, tech, AI, and crypto. But I also use stock events to track my dividend stocks. As you can, on any stock, you can see exactly how much you're going to be getting paid per dividend payment. So this is what quarterly they pay out, but yeah, it does show you the exact dollar amount that you'll be getting paid and everything, so that's very handy too. So yeah, those are the two things I use to buy assets and what I use to track assets. Now, lastly, I just want to go over what I recommend you guys using as an exchange. Not financial advice, of course, do your own research, but this is what I've got summed up from my research. So Interactive Brokers, based on if you're buying $10 per stock, it is going to cost you about 65 cents. So that is, based on my research, the best you're going to get. This is Interactive Brokers, though, is only stocks. You can get stocks anywhere around the world, but it doesn't do crypto. So in terms of crypto, I would recommend, I use CoinSpot. Fees are a bit more, but I would recommend the cheapest fees, I think, in Australia, from what I can find, is SwiftX. So it's actually 0.6%, but you can get it down to 0.1%. So yeah, under $100,000 is 0.6%. So on a $10 trade of crypto, you would be paying 60 cents. So that's the best you're going to get. So they're the two recommendations I have for an exchange for stocks and an exchange for crypto. So that's going to be it for this video, guys. Please remember, this is not financial advice. This is purely based on my research. If you do want to follow along, chuck us a follow. I'm always trying to invest in the assets at the best prices, so you're not late to anything. And please chuck a comment in the comment section or send us a message if you have any more questions. I'm happy to help. Thanks, guys. Bye.